funds. How many of us have them? Funds. The ones you can depend on. Get those funds.
Hi, ladies. We are back. Welcome back to your Balance Your Books podcast.
Yes.
And hello, April and Kimberly.
Hi, Kina.
Hi, Kina. Hi, Kimberly.
Hi, April.
Hi,
Great to see you all again.
I know.
April just came in from the cold.
Harry.
So, first thing we always want people to do when you join our podcast, which we are happy you are listening or watching.
Right. So if you're listening right now, you're listening on Apple, Spotify, or YouTube. But don't be selfish. Share it with your family and friends, like and subscribe. And if you have any questions or anything, let us know. If you're on YouTube, you can leave a comment, or you can go to yourbalancedpartners.com. And there's info there for you to get in touch with us.
Exactly. We'll be happy to work with you.
Yes.
So, this is a continuation of the previous podcast where we are talking about taxes and structure and getting a little bit more, as I like to say, to the Sesame Street level based on questions that we have received.
Mm-hmm.
So this next portion is really centered around the setup of an LLC, an S-Corp, and a self-employment tax. And what is that? What does that really mean? So, and we talked in the previous podcast about business expenses, what could be considered as a business expense, even if you're a sole proprietor, or the things that you track separately.
Mm-hmm.
April, is there anything you wanted to say around that before we get into this next part?
About what now?
You had mentioned that maybe just to clarify that in business expenses, things like lawn care are not included.
Yeah, that's considered a personal expense.
Yes,
when you're looking at your home office as a portion of the expenses for your home, lawn care is not included.
Right. Yeah.
Yes.
Mm-hmm.
Your lawn can be raggedy in terms of the tax.
Do business. You can still do business in your home office.
But for your neighborhood, please take care of your lawn.
Yes, please.
Yeah.
Okay. So, for someone being an LLC or S-Corp, let's talk about what is the benefit? What's the so what?
The what?
Yeah, what's the so what? Like, what do you get? What does it help you do? What's the why?
Okay.
Because people just say set up an LLC.
Yeah, you need to set up an LLC.
Yeah, what's the so what?
The so what is, I guess, for an LLC, the difference between that and a sole proprietorship is you are supposed to limit your personal liability through an LLC. So that's a benefit between those two.
Because what does LLC stand for?
Limited Liability Company.
Yes. Okay. Carry on.
Yeah. And that's always important when you're in business. I mean, you never know what can happen. And so you could be selling something that ends up getting recalled or has some kind of defect. And, if you're not incorporated or have some type of business structure that would limit you personally, then people can go after, or hold you liable and your personal assets as well, especially with a sole proprietorship.
And I think we hit on that part in an earlier podcast on the legal side of it, but from a tax perspective. So since we're kind of focused more on tax, what's the so what? That's what I meant. Was what is it how should you be moving differently when you move from a tax perspective, when you're moving from sole proprietor to an LLC, tax wise?
Well, the only thing I can really think of at the moment, or I guess would be the most significant thing, is, when you have a sole proprietorship, So all of your business income, all of your business expenses hit on your Schedule C. And then, of course, you have to pay self-employment taxes. And so the difference between that one and a limited liability company is that a limited liability company has all of that on their individual financials or tax return. And so they're only having to pay tax on the net business income, or I guess the portion that gets passed through to them. And then even when it gets passed through to them, potentially they could have other expenses that weren't included on the business side that they could kind of bring that income down further, potentially.
Right. So
but
let's
then-
stop. Wait. So let's stop right there. Let's make sure people understand that. An LLC has its own tax return.
Yeah.
Yes. So
Well,
the 10.
it depends
Okay.
on how
does it
they're
depend on?
structured.
Okay. So let's talk about that. So is it because if there is more
and
than
the
one
election
owner?
that they make.
In the election.
So LLC can make an election to be taxed as a corporation. They can make an election to be taxed as a S-Corp. And then their default is going to be as a sole proprietor, basically. If they don't make any.
Okay. So if there's an LLC and it's a single member, which means that person owns 100% of the LLC, they could elect to have their tax return, they can elect to have the business income expenses be on their Schedule C. Is that what you're saying? If it's 100% owned, is that what you're saying? They don't have to do a separate tax
I think
return.
that's the default.
Yeah, that's the default.
Okay. So
Mhm.
so that's the default. If they didn't do any kind of election to do anything else, they are 100% owner of that LLC. They can, the default is that it would be on their Schedule C.
Yeah, if they don't
If
make
it is a situation where they but they can elect to be as a S-Corp. They can choose to, they can be organized as an LLC, be 100% owned by them, but elect to do taxes as an S-Corp.
Yes, you can make an election to be S-Corp.
And why would you want to do that? What's some possible reasons that you would want to do that or consider doing that?
I think because in the past, S-Corps were great because you didn't have the reasonable compensation requirement. And so you could literally do distributions of your profit and avoid self-employment taxes.
So what do you mean by, first, let's break that down to regular people. So one, what is self-employment tax?
I would say that's basically your FICA, your Social Security, and your Medicare.
Mhm.
Okay.
Which
So
both, go ahead.
No, go ahead. Finish it. No, finish that thought.
They're both taxed at 7.65%, or whatever your business income is.
Okay.
Net
So is it the total income of the business gross, or is it the net income?
I said net business income.
Oh, okay.
Net.
So it's the net business income.
If you're paying taxes on your gross, something's wrong.
Yeah. Okay, I just want to make sure. I want to make sure that that
you don't have no business expenses.
That our listeners, that's why I want to make sure the listeners that they have their gross income. I'm saying it this way because of the conversations I've had with people, and they were like, "Huh?" So you had your gross income. You then had your business expenses that you put against it. and now you have your net income.
You
That
have your
net income has a self-employment tax that is around 7.65%, whatever number you just said.
No.
No.
That's only the Social Security and the Medicare. Both have 7.65. Total, it comes to 15.3.
Oh, each one individually is 7.65%.
And,
Yeah.
and let me say that was a learning tool after being a W-2 employee forever. You know, on your paycheck, you only 7.65 got taken out. And that's because your employer was paying the other 7.65.
Yes.
And so becoming self-employed, it's 15.3. You know, but I was accustomed to know, because, you know, I used to calculate my stuff down to the penny. And I knew that 7.65 was coming out, but now I'm paying 15.3%. So yes.
Yeah.
So at a minimum, typically you have to pay 15.3% of your net income as taxes.
Yes, for self-employment taxes.
Okay. So in order to reduce that percentage, it would be that you would have a reduction in your net income.
You don't reduce the percentage.
No, well, I'm sorry, not reduce it. You're right. In order to have less tax to pay, not to reduce the percentage, the less tax to pay, you would have to have less net income from your business.
Yes.
Okay. So in the situation, what happens if the business has a loss?
Nothing is paid.
Nothing is paid. Okay.
So
if the business has a loss, then there is zero that ends up being paid because the percentage is not applied against it.
Right.
Okay.
For the most part.
In the situation of now you have an LLC and it's you and another person have some percentage ownership, then the LLC has to have its own tax return. Correct?
Yes.
Okay. So that LLC must file a return depending on the election that they made. But in that case, the default election is the 1065. That's a question. Is that the default?
I think so. Yeah. I think even when you do your EIN number, it automatically defaults to that.
Yeah. Yep. So if they do not do an election, and there's actual form that you would fill out to elect to do it as an S-Corp. And if you do not fill that form out and you do not get back a letter that says yes, you are been S-Corp. You've been approved. You are not an S-Corp, and you have to have that on file, and you have to know where that is, and you have to know when you did it.
And how do you know all this, Kina?
Well, one, you should keep your any letter you get from the IRS, you should keep it. But you can also go out to the irs.gov and look up your information too.
Yeah.
So you need to know how you have set up your business with the IRS.
Yes. Meaning, don't just let your friend that's a lawyer set up your business and then just walk away.
Exactly.
Keep those documents, know what you have, how you have set up your business so that you are filing the proper tax forms, and you don't get a letter from the IRS saying, whoa, you put this on a Schedule C and it should be on a 1065, or you put this on a 1065 and it should be on an 1120S. Right. Know how your business is structured and what you elected and what you've chosen for your business.
Right. Because most small businesses, you're either on, this is in general. So always put the quote at the bottom, always check with your personal tax professional. But you should, but you're typically going to be either a Schedule C, a 1065 for LLC, like a partnership, or an 1120S as a S-Corp. Most of the small businesses in the country are probably doing one of those three.
Mm-hmm.
By far, the majority. And
Mhm.
you should know which one you have elected to do. Right?
Yep.
And self-employment tax is, if you have income, you're going to have a percentage of that be your tax liability.
Mm-hmm.
Right. So if you are working, then it may be a good idea to, would you say that it would be a good idea to at least pay some portion of that quarterly?
Yeah, I mean, you should pay your taxes quarterly if you think that you have a profit.
Yeah, because tell me this, April, because this was new to me. We were talking about when you file an extension and the late filing fees. April informed me, even though, let's say, I have a sole proprietor business, my income falls on a Schedule C or whatever, April 15th is when my taxes are due. But they start assessing interest from 12/31. The amount that is in,
Well, there's a calculation that is done, and if you're within a certain percentage of that calculation, then you don't incur any additional costs, right? But if you
it doesn't start, if I
significantly
file an
exceed
extension,
that.
right? But if I file an extension,
Oh, an extension?
like, well, no, let me
Oh,
set
okay.
the stage.
Wait.
If I file an extension,
Okay,
right?
first of all, let me just say, y'all keep asking me all these questions like I'm a full-time tax professional.
No,
And I
you do taxes more than we do.
so
Right.
that's
And
the
I
only
know
thing.
a little bit to be dangerous. I know a little bit to be dangerous, and I've been Googling stuff while we be talking. But you, April, told me this regarding one of my clients that I did not know before you, April, told me. This is what it was. Filing an extension. She did not want to file an extension. She was like, because then there are more penalties or whatever. And you told me that based on the calculation, they start calculating interest from 12/31, not from April 15th. Right.
Yep.
So even our taxes are due on April 15th. If you're not paying taxes throughout the year and you know you have to pay, that's why when you use a certain tax software and you have to pay, they tell you, hey, recommend, why don't you pay quarterly, right? So if you're not paying something throughout the year and you're letting it sit until the end of the year and you owe money, they start charging you interest, not from April 15th because you filed an extension. Your interest is being charged from 12/31 because 12/31 is the date, the end of the year, and that's when everything is.
Right.
That's what I wanted to clarify.
Right.
So I asked you, April, because you told me.
Yeah, I didn't realize that either.
Yeah, right. Because I would never pay in advance, just a little bit something throughout the year. Because why?
No.
But now I'm like, but then I went back and looked at the interest that they charge and the interest that I could earn on my.
And I was like, and I thought it was okay. That's what So,
but yes, but it's good to know. It's good for people to know that. That if you're concerned about the interest and penalties and things like that, if you're looking at interest, you're getting charged when they calculate how much you owe the government. They're starting from 12/31, not April 15th. It's not that if you pay your taxes on April 15th, there's no interest. There's interest in there. And so, it might be beneficial to you to pay a little bit throughout the year to lower that interest.
Yeah. And I think that once the year closes out, I think you have until January 15th, if I'm not mistaken, to go ahead and pay your remaining liability to not incur any interest.
Yep. Okay. Anyway, carry on.
I think that's important. That's what I said. Regular folks don't know this stuff.
And I'm a CPA and I didn't know it until
and also when you file an extension, that helps prevent penalties.
Right. But
you still are going to incur interest.
Right. Yes.
Say that
But at
again,
least-
April, for the people in the back.
I was about to do something crazy. Yes. So filing an extension assists only with not having to pay a penalty.
Mm-hmm.
If you owe taxes, you still will have to pay the interest.
Right.
If you do not file an extension, you're going to get hit with a penalty and interest.
Mm-hmm.
So it's going to be both.
Yep.
So filing an extension saves you on the penalty fee.
Mm-hmm.
And you
Mhm.
can file an extension and go ahead and pay something
You should.
at that
Mhm.
point, just to at least help with hopefully reducing the interest that you would get charged because you had a payment in there. So,
Yeah.
even if with the extension, if it's a, let me just at least pay what I paid last year, say,
Mm-hmm.
then that could help you.
Because
And
most
don't
times you're
send
filing
a
an extension.
random payment. Actually tell them which tax return
Yeah.
Yeah.
And which
and
year.
which year it relates to.
Yes.
Yes.
And when you go into irs.gov and it sends you to the payment link, it asks you in the drop down what tax year it relates to
Mhm.
and what type of form do you normally file. So make sure you're picking the right year for if you're going to send that payment in.
Mm-hmm.
Exactly.
And then print your receipt and put it into your tax file.
Right. Yes. Okay.
Mhm.
All right.
Yeah.
All right.
So we were at electing to be an S-Corp or being an S-Corp, and we started talking about the requirement to pay yourself when Kina diverted it. So let's touch on that before we end this segment.
Right. So what's that requirement around paying yourself? Because you said that was the big difference, April, with an S-Corp that changed. I guess, I don't know what year it changed,
Mhm.
but before you didn't
Yeah,
have to do that. Now you
because
have to do that.
people
Talk about
were
that.
avoiding self-employment taxes. And so, you know, self-employment taxes is a big moneymaker, I guess, for the government, So, and I don't necessarily mean moneymaker, but they generate a lot of revenue based off of that, which ultimately, helps fund people's Social Security, right?
Mhm.
And Medicare.
Yes, and Medicare. So that's what that fee is for. And when you pay into it, that is what is allowing you to access those funds and those benefits later in life. So one thing you have to take into consideration is if you never pay self-employment tax, you're not paying into that benefit. So then, if you've never worked a job, never reported any income, you're going to be looking real slim when it comes to when you are retirement age and want to draw down Social Security, because if you don't pay in, you're not going to get anything out of it.
Say that again for the people in the back. I don't know if people realize that.
Yeah. So, yes, you may not realize that if you do not pay into the system, you will not benefit from the system.
Yeah. You don't get it
So-
because you're just a U.S. citizen that's over 65.
Exactly.
Right. Yeah.
You have to have
That's
paid in through either a W-2 or self-employment tax.
absolutely. Yep.
Okay. Go ahead, April. I just want to amen that.
Okay. So, and I'm sorry, but where
And
else
then,
was
so
I
you were
going
saying,
with
so
it?
then the minimum, so people were trying to avoid, you were saying that before people were trying to avoid self-employment tax and things like that. through an
Yeah, we
S-Corp
were back on
election,
S-Corp.
and now, yeah.
So yes, they were able to avoid it. Can you believe that? And not have to pay anything towards it and not pay any taxes on that money. And we're talking about, it could be millions of dollars. I think a former presidential candidate kind of got in trouble with that. Former, We talked about it probably like 20 years ago. But at any rate, yeah. So now the IRS has implemented a rule, and it's been around for a while, called reasonable compensation. So if you are an S-Corp and you are actively working in that business, then you must pay yourself what is considered a reasonable compensation. And when you pay yourself that, then you get, the business has to pay the payroll taxes. So it's covering the, self-employment tax that you would normally incur for you. It's either being deducted out of your wages or the company is paying the other half. But reasonable, you have to be reasonable when it says reasonable.
Mm-hmm.
And so looking at, what you do, your experience level, the time involved that you work the business, what would the salary look like for that, for anybody out in that particular industry. And so you could do things like, I think there's Glassdoor or maybe Indeed, and kind of see what a CEO is going for, or a technician, or, whatever your specialty is, whatever it is you're doing for the business, and base your compensation off of that. That way
relative to how much money that company
right,
makes.
right.
Huh?
Relative to how much money that company makes. Like, not, you aren't gonna look at CEO of Coca-Cola or anything. You're gonna, like, even if if your company only makes $500,000 a year, your reasonable salary as CEO would be lower than if it made $2 million a year.
Right.
Yeah. Mm-hmm.
Right. Okay. Yeah.
I would say that, because if you make $50,000 a year, you can't pay yourself $100,000. So
hold my beer.
So yes,
I've seen some craziness.
Mm-hmm.
Yeah, you would think.
Yeah.
Yes.
So reasonable, given your experience level, the frequency, the hours that you put in relative to the income that you're generating.
Yeah. Yeah.
I think all that is important.
So really, because that is something we have seen, several clients who did the S-Corp election, but do not have themselves on payroll.
Right.
And so that's
and they're
one of the
actively involved.
Oh yeah, they're running the business.
Mm-hmm.
Oh, okay. Yeah. Yep. So that's definitely a red flag.
Yep. And
for the
so,
IRS.
Right. And so that's one of the things that we come in and correct is putting the person on payroll and changing how they are compensating themselves in their business because they did the S-Corp election. And so part of why you need to have all of your documents when you are starting to work with someone is so we can figure out what you were elected to do, because sometimes we don't find out for a couple of months. It's like, wait, you're in a, like when we finally get their tax return, or some of the clients we have, we're helping them do 3 and 4 years of tax returns because they haven't been doing them. And so then we start to look at how they've elected for their business in the IRS, and we find out they're an S-Corp, and we're like, okay, you haven't even been managing your compensation appropriately per IRS guidelines.
Yes.
Mm-hmm.
So get with someone like your balance partners to get you straight and get how you are managing your business to make sure you're doing it appropriately.
Mm-hmm. And then
Anything
have
else
a
you want to
plan.
add?
Have a plan when you're an S-Corp for, because when you're an S-Corp and you pay yourself a reasonable salary. So let's say you made your net business income was $100,000. You paid yourself $60,000. So you've got $40,000 that you can either distribute to yourself. Well, yeah, I guess you could keep it in the business, but
Right.
if you distribute that other 40,000, then, that's not taxed, right? So the 60,000 that you are getting taxed that the company is paying for is probably around $9,000. So that other 6,000 that you're saving, since you're not paying into self-employment taxes, you might want to invest that. And, when you take that distribution, figure out a way to invest that in your future and your future retirement, since you're not contributing it to, your Social Security benefits. So it's just an idea, a thought, because you might be able to invest that and it result in more than maybe what you would get by them recalculating that as part of your Social Security. Just something to consider, because in that example I gave, that's the savings. So in general, a S-Corp is going to save about $6,000 on that $100,000, where an LLC is not. They're going to be paying the $15,000 if it's showing on their Schedule C. So if they haven't elected to be an S-Corp, then that's going to pass through to their Schedule C. If they have any other expenses, or when it just passes through to them, they're going to get hit with the 15.3%.
So that's very good. Advice to make sure. So when if you do that additional distribution to yourself, which one, you also need to figure out how much money needs to be retained in the retained earnings of your business to run it. Because there are some of our clients take out all of it and go buy a new whip, go buy a car, go on vacation, all this kind. They don't invest it, and they take out too much out of their business, and now their business is cash poor. And is not able to operate without crazy loans and things of that nature that gets them more in a hole. So it's about figuring out the right compensation and then the right amount that needs to be retained into your business. Okay. All right, ladies. Great stuff today. I hope some people listen. We haven't sang in a while.
We have not. But we can with our shooting the
Yes, so our shooting the I need someone to do the T. Topic today is your favorite Christmas present you ever received. Who wants to kick it off?
I can kick it off.
All right.
This is petty. It is not nice. I'm just gonna put that disclaimer out there, right? So growing up, we grew up with, what do people say? I grew up with humble means or whatever. We was poor. And I'm a middle child. And we would get Christmas gifts from family members. We were the angel tree kids growing up. Christmas gifts for everywhere, right? One year, my grandmother's sister, raised by my grandmother's sister, Aunt Catherine, she just sent one gift. The dress.
And there were three.
It's three of us. Well, you know what? Well, yeah. I don't know if it might have just been two at the time.
Oh, okay.
But she sent one gift and it was for me. It was a dress. And that was the one time, I'm sorry, it's petty, but as the middle child or the second child growing up, it was a lot of things I went without. For instance, my parents were married when my older sister was younger. So she did the Girl Scouts and stuff like that. I never did all that. my birthday is at the end of the month, and when you're on government assistance, by the end of the month, stuff runs out.
Mm-hmm.
So, you know, so it was like I went through like, but I, you know, that's what it was. But when I got that present, because I found out I was her favorite, and she didn't. Now, my grandmother was mad. She cussed her out for only sending one present. But I think I was like 9 years old, and I was like, well, yes, please and thank you. So it's petty, but y'all know, y'all deal with me in my middle, and being the middle child and my middle child insecurities. So that was one of those times when I rejoiced, because I've never liked Christmas just for that. I mean, not never liked Christmas. Christmas is not my favorite holiday. I love Christmas music, but it's never been my favorite holiday because, you know, growing up, we didn't have all the stuff.
Yeah.
And that 1 year, yes, ma'am.
Yes.
So it is.
And you probably strutted. You probably strutted in the dress.
I did.
That's petty. Because at first it doesn't seem petty, but I think there was some.
You know me. I strutted it. Yes.
Yeah, that's where the petty came in. Really.
I was
Well, see, as the youngest of the bunch, I would have cut that dress up.
Oh, there are. Let me tell you, there are stories, April, you haven't heard, where I have done stuff like that. But yes, yes.
I'm so glad you all have worked that through therapy.
Good thing, baby. Okay, April, what's your favorite Christmas gift?
My favorite Christmas gift of all time was the Whoopsie doll. So there was a doll where you would squeeze the stomach and the ponytails would go whoopsie, whoopsie. I saw that doll and I just fell in love. I saw a commercial and I was just like, oh, I want that doll. And I remember my mom going, now I grew up in Arizona. So I remember my mom just determined to get me that doll. And not only determined to get that doll, but get a black one. The black
in Arizona.
In Arizona. So I'm going with her store after store. And I didn't really fully understand what was going on. But I just remember I kept seeing all these Whoopsie dolls, and my mom wasn't buying one. She must have gone to every toy store in Arizona to find a doll. And I think somebody probably just felt bad and said, we need to get this woman a black doll. And somehow, by a miracle grace of God, on Christmas when I opened the gift, I had a brown Whoopsie doll.
Yay!
I was so happy, man. I carried that doll everywhere. I used to feed it, and it didn't have, it wasn't one of those kind of dolls
Where
home there. I loved it, and every day I was like, whoopsie, whoopsie, whoopsie.
And your mom's probably like, why did I get her that doll? If I hear that whoopsie sound.
I love that dedication, because she was gonna get her brown baby a brown doll.
Yeah.
Right.
Yes.
Right.
He made it happen. And if anybody could do it, my mom definitely could.
Yes.
Right. Oh my gosh. Oh, I love
What
that.
about you, Kina?
Okay, so my favorite, I was huge into Barbies, and it's kind of along the doll thing. That's why I get so excited, because there's so many brown dolls now that I think they can throw a rock and hopefully I hope it's like that around. We do live in Atlanta, so maybe.
Yeah.
But even in Kansas City, where I'm from, when I'm home, I see a lot of brown dolls. So I was huge into Barbie. Love Barbies. And one Christmas, and my parents, especially my mom, loves Christmas. And so one year, I was the type that had the Sears catalog, and I would go through and highlight the things that I liked, and the big, huge catalog, and like, oh, this would be great. And one year, I went downstairs. We lived in a townhouse at the time, and like the living room, there was like a fireplace, and all this stuff was on the lower level, and that's where the Christmas tree was. And I went down, and there were no gifts. Like normally, when I woke up on Christmas morning, there were gifts. That year, I woke up, there were no gifts, and I almost had a heart attack. I went into the garage. I didn't see anything. I was like, maybe Santa left them in the garage. Like, what the hell is going on? Like, how could this go wrong? What did I do? I was looking all over, and then I went back upstairs and woke my parents up like Santa didn't come. Santa didn't come. And then they were like, what happened? I don't know what happened. So they run downstairs, and then they were like, wait, I think it's stuck. And they did something to the fireplace, and the gifts fell out the fireplace.
You tell me this story. Yes, I love this story.
And I was like, look, so relieved. Oh, Lord. I felt like nothing. And the thing that I got that year that came around the corner, because I guess it didn't fit in the chimney, was the Barbie dream house. The Barbie dream house. And me and my dad put together the Barbie dream house. And there actually is video of me when my mom would come down. I was like, I'm like, look, and it has doors, and you could open the windows, and like all this kind of stuff. I don't know where that is.
We gotta find that, and we need to show the podcast audience that.
Yeah,
it is video of me going through and showing all the different things that that house could do. But me and my dad, because it came in a box. You had to build your dream house, and so I've loved interior design ever since.
That's a lovely
that was my
story.
favorite gift. That was a favorite gift.
Oh, it's Christmas time.
It's
Christmas
time.
Music time. So I hope you all are enjoying Christmas.
Yes.
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 Friends and family.
Yes.
Will be a very special Christmas. You supposed to join in.
No, I was about to go. I was about to come this next part.
Okay, look at April's
All right,
face.
it's time to end this.
She's
All right.
not in this.
It's time to go. Bye, y'all.
Shake a hand now, which I did not say that before.
Okay, yeah.
Anyway, all right.
Bye.
Well, everyone, have a great season. We'll come back with some more episodes soon.
Yeah.
Bye, y'all.
Bye. Bye. Don't. Remember, our advice is general knowledge. Please consult your tax professional for directions specific to you and your business. Thank you.